How's it, guys? Welcome back to the channel. So I'm gonna call this uh how to trade the ICT New York PM session silver bullet. How to trade the New York PM session. The last title for this video is gonna be it's gonna be. In fact, I'm gonna go with this one: Advanced Lesson on Silver Bullets. So today I'm gonna give you an advanced lesson on silver bullets. So as you know, guys, on this channel I'm not gonna waste your time. I'm just gonna go ahead and give you all the good stuff. So if you like the content I'm sharing, please do take a moment to like and subscribe to the channel. If you have extra time on your hands, please turn on the notifications bell so that you may get notifications of my future uploads. Now, let us get into business. So again, how to trade ICT PM session silver bullet, advanced lesson on silver bullet. Okay, guys, when you're looking at the PM session silver bullet, or if you're looking at if you're interested in trading that, or if you're interested in making that your model or your AKA strategy, silver bullets, you wanna be looking at the charts from 2 p.m. up until 3 p.m. Now the PM session is made from 2 p.m. up until 4 p.m. So that's the difference between the PM session, the overall PM session, and the silver bullet. So the silver bullet, you can look for it from 2 p.m. up until 3 p.m. Ne? The PM session will start from 2 p.m. and end at 4 p.m. So the the PM session is divided into two parts. The first part from 2 p.m. to 3 p.m. The second part from 3 p.m. to 4 p.m. Don't let it get complicated. I'm gonna just quickly show you what I mean. Okay, so when you're trading silver bullet, you wanna be looking at your charts from 2 p.m. Ne? So you wanna be available on the market, in the markets from 2 p.m. The reason I say specifically from 2 p.m. is because you need to have this 30 minutes, 30 minutes just before 2 p.m. In other words, from 1:30 to 2 p.m. That 30 minutes, you first need to have that on your chart before you can even be interested in looking at your silver bullet. Because what this will do is that once you become once you look at the market from 2 p.m., it will allow you to have this 30 minutes already in price. In other words, you won't be anticipating what 1:30 to 2 p.m. is gonna do. It's already gonna be there for you to see it. Example, or what I actually mean is that when you are interested in trading the silver bullet, you wanna be a participant of the market, or you wanna look at the market from 2 p.m. So right at 2 p.m., that's when you wanna start looking. From here, you wanna be offline, you wanna have your eyes closed. You don't want to be looking at this first 30 minutes. If you're interested in what? Trading the PM session silver bullet. Now, immediately when you open your chart, it's gonna be 2 p.m. Ne? You're gonna have this first 30 minutes on your chart. So you're gonna have from 1:30 to 2 o'clock on your chart. when it opens, the 1 minute candle, when the 1 minute candle opens at 2 o'clock, you're gonna mark that price. So you're gonna mark this opening price at 2 o'clock, extend that to the future. This is what is called the opening price. Now, if you are not so new to this concept, you're wondering, why am I using an opening price of 2 p.m.? Because the PM session silver bullet is actually the PM session trade. So I'm interested in looking at what is the opening price for the PM session. In other words, immediately at 2 o'clock, what is the opening price? What that opening price, or what marking the opening price does, is that it allows me, without the use of an indicator, it allows me to gauge between overbought and oversold. What does that mean to you, the trade? When we open at 2 o'clock, if price is trading above the opening price and we're bullish, why are we bullish? The whole AM session was bullish. If AM session was bullish, in the PM session, we expect a continuation. Most likely anticipate a continuation. Now, with that thinking, if we open here at 2 o'clock and price trades below the opening price, that already tells me that price is oversold. Now, when we open here at 2 o'clock, how far, when we open at 2 o'clock and we are bullish and price is currently trading below the opening price, how far below can price remain as oversold? So when price is trading below the opening price, that is oversold. That is oversold. Price is very oversold. Now, how far below the opening price can price be oversold? Well, below the low that was formed between 3:30 to 2 o'clock. So price can only trade up to below the lows created in between 3:30 and 2 o'clock. Once price trades below that, we look to see, is there an imbalance below price? Yes, there's an imbalance below price right there. Price finds support, trades with the bullish order block, and then it starts showing signs of pricing higher. Now, after price finds aka support at this order block, and after it rebalances this imbalance here, this fair value gap, the difference between that low and that high there of the order block, that's a fair value gap. I can make it like this also. So that's a fair value gap. See how price found support there the first time, it came back again, found support again. What does price do after that? It prints a fair value gap. The difference between this high of this candle and the low of this candle, that is one singular upward close candle. So that is one single printing of price. That is an imbalance in price. The algorithm will identify that this is a fair value gap. It must be balanced, rebalanced. Now, what makes this an important fair value gap is, at the time is forming, we are bullish. We're anticipating bullish price action. Why? Because the whole New York AM session was bullish. So it makes sense that in the PM session, we're anticipating continuation. Right? This is the first bullish fair value gap we see. These 1, 2, 3. These 3 fair value gaps, those are bearish fair value gaps. The reason why we are not interested in selling those is because we are bullish. Why would you want to sell if we are bullish? So these fair value gaps, we ignore them because we are bullish. So you see how I'm teaching you to avoid the bad fair value gaps that you will probably fall victim to if you don't have narrative on your side. Let me bring something to your attention. So guys, every candle, before it prints, even on the daily, even on the 1 minute, even on the 1 second, every candle, it first opens here at the opening price, it prints lower, and then it prints higher, it prints the high there, and then comes back to close here. It retraces to close here. So every candle opens here, prints the low, prints the high, and then retraces, and then prints the close of the day, or of the candle if it's a maybe 1 minute candle or 1 hour candle. Now, with this thinking, that's how every session is. Believe it or not, every session is like this. It will open here, print the low of the session, print the high of the session, and then come back to retrace into the close. With that same thinking in mind, we're taking something that is so complex, we're making it so easy, because why does it have to be complex in the first place? We open here at 2 o'clock, we go down to print the low of the session. More specifically, we trade to this bullish order block. Look how we trade to it there perfectly, to the tick, perfectly. The opening of this candle, you're looking here, the opening of this candle comes at 16,003. Wow, this is gonna be beautiful to see. 16,000, is that a coincidence? Nope. 16,003. The low of this candle, you're looking at the L there. The low of this candle is 16,003. That is perfect. There is nothing more perfect than this. This is perfection at its highest level. Perfect, perfection. So that is the low of what? That ends up being this low. It ends up being the low of the session. Low of session, or the PM session low, right? And then what does it do after that? It prints higher above what? The opening price. So it opened here, went lower to print the low of the session, printed above the opening price. What does it do? It returns back below the opening price. When it does that, my money is buying that. Remember what I said? When price opens here, anything below the opening price, smart money is buying that. Now, there's different types of smart money traders. In fact, you at this moment, if you learn this thing, you'll realize that you're also a smart money trader. Now, we have different personalities. So not all smart money traders will enter right there. Others will enter at the low, at the lowest low. Others will enter there for a buy. Others anywhere in between this. Others in very close proximity to the opening price, they're still buying that. So when price returns below the opening price, so if they see price returning back to the opening, below the opening price, they will buy that. But what is actually happening is that price is just trading to this fair value gap. What time is this fair value gap formed? This imbalance in price? 1423. That is a PM session silver bullet. It is a second opportunity for a buy. The first one was here. So this bullish fair value gap, that is the first silver bullet, second chance silver bullet, third here if you look on a 10 seconds, but I won't go anywhere lower than 1 minute. So we'll just say it gives you first opportunity and then second opportunity. This one is more golden because this one is after price trades above the opening price and it confirms that, you know, it's going up, it's bound to price higher. Then it just comes back to get the last part of smart money owners that are going to be buying this move. So they buy there, then they push it higher. Obviously, on the 1 minute, there isn't any more fair value gaps that get traded to. Now, let's mark 3 o'clock. So you as a trader, if you're maybe new to silver bullet, opening price there 2 o'clock, 3 below it you buy. Oh no, you're not trading order blocks. Sorry, you're not trading order blocks, so you won't be buying this order block there. You'll be buying the silver bullet, which is here. So you'll first buy there, you second buy there, and then 3 o'clock, there's nothing stopping you from exiting the trade. In fact, I am teaching you that at 3 o'clock, exit most of your trade, if not all. Cause why? After 3, the market will probably move against the move of the day, especially at 15:15. Now, on this day, trust me, it also surprised me. On this day, it forms the high exactly at 15:14. It looks like a coincidence, it looks like it's cherry-picked, but trust me, 15:15, when the market on close macro begins, the algorithm will probably price in a different direction to what you've probably seen throughout the whole day. Now, if you want to understand what I just said right now, go back to this thinking. If a daily candle opens like this, it first opens here, forms the low of the day, goes up to form the high of the day, and then come back to retrace into the close here. This forming of the high of the day and then retracing back into the close, what time do you think that is happening? You probably want to think incorrect things, so I'm going to show you. It's happening at 15:15. It forms the high of the day there at 15:15. It forms the high of the day at 15:14. At 15:15, immediately when it says 15:15, the market on close macro begins where price will target opposite end of liquidity. What does this mean? Price will target opposite of end of liquidity. So if we're bullish, price will target what? Sell side liquidity. Where is the nearest low resistance sell side? It's right here, below these equal lows. So they'll target that. So immediately at 15:15, they'll start reversing, targeting what? Equal lows, opposite end of liquidity. Guess what? After 3 o'clock or after 15:15, fair value gap, trade to it. That's still a silver bullet, believe it or not. Trust me, I'm not going to argue with you, but believe it or not, that is a silver bullet. Now, I'm showing you a silver bullet that went high and a silver bullet that went down, all in the same day, in the same session. It's like that. Believe it or not, it's like that. Every single day, you can backtest it. It's like that. Market closes here at what? At 16:15, but obviously you don't want to be looking at the market after 4 o'clock. So where's 16:15? 16:15, probably here. Market closes there. That's how they form the daily candle.